Alright, so in this video, we'll be looking at how financial markets are reacting to the US raid on Venezuela. What exactly even happened in the first place, though? In a recent military operation conducted by the US military, the Venezuelan president, Nicolas Maduro, along with his wife, were arrested and brought to the US. But why does this matter, and how does it affect the financial markets? Venezuela has the world's biggest proven crude oil reserves, sitting at over 300 billion barrels, but only accounts for less than 1% of global oil exports. Venezuela is also rich in and largely exports heavy crude oil, which is also the type of the oil the majority of oil refineries in the US prefer for higher efficiency. But the issue is, as you can see on the left side, for the heavier crude oil, the US has to actually import most of it to keep these refineries running at higher efficiency. While on the right, we can see that the US domestically produces a lot of lighter crude oil and has to import less of it. The companies then blend the light and heavier crude oils to optimize the costs and maximize efficiency. Now, President Trump has said that the US will be running the country temporarily, while the Venezuelan Supreme Court has placed the country's vice president as the interim president. She was also previously the Minister of Oil for the country. Trump has also stated that he wants American oil companies to invest billions of dollars in Venezuela and start making money. Now, if this goes through, it would mean that Venezuela could start exporting large quantities of heavy crude oil, which American refineries require and previously could not use due to sanctions on Venezuela. And now, with all of this sudden action, this has led to more volatility and speculation on the future of Venezuela and how other countries will respond to this move. This increased volatility has pushed gold prices up today by about 2.5%, as it is a safe haven asset and went up as fear increased and investors rushed to buy such safe assets. Along with gold, the light crude oil prices went up as well due to the same increased volatility and possible higher future demand, sending prices up nearly 2%. The jump in oil price, along with a potential boost for US-based oil companies, the FANEC Oil Services ETF, a basket of oil companies, also jumped by nearly 6% today. And as you can see here, a breakdown of the stocks the ETF holds, where many of whom saw a massive jump in the stock price today, pushing the ETF price higher. Now, as I mentioned earlier, the US imported a majority of the heavier crude oil to use in the refineries. This crude oil used to be previously imported from Venezuela, but after sanctions on the country, almost all of the heavy crude oil came from Canada. And in 2024, 75% of all heavy crude came from Canada. And now that Venezuela may soon be able to start exporting oil, which will be extracted by American oil companies sent to American oil refineries, the imports from Canada may drop as it may become cheaper to use exports from Venezuela. Over this possible risk, there was also a drop in stock prices of Canadian oil companies, with Canadian Natural Resources dropping 6%, Cenovus Energy down by nearly 7%, and Enbridge down 3% today. The read also poses questions and an uncertain future about the South American continent due to possible political instability in the future for the region, and may lead to lower equity growth and more caution from investors when investing in the emerging market economies in South America. Alright, that was it for this video. Thank you for watching.